Good day to one and all. Today, in this video, we will be discussing on the basic components of financial statements. What do you mean by financial statements and what are the objectives of financial statements? And along with that, we will also be covering about what is the use of preparation of financial statements. So with this, we will first try and understand what do you mean by financial statements. Now, every business organization or every businessman who is into the process of doing business aims at earning profits. So it is the accounting that shows whether a particular individual is earning a profit or is running under a loss by running a particular business concern. So the role of accounting and book maintenance becomes a very complex process which is essential in order to understand whether a particular business is running in profit or whether the business is running in loss. So in order to compile the profit or loss that a particular business has made out of its day-to-day transaction, financial statements play a key important role in determining this process. So the role of accounting is to compile all the financial records of a particular business in such a manner so that the particular individual or the organization will be able to yield whether it is a profit or loss out of running a particular business. Now, the annual reports of a particular company is prepared by the management in order to inform the stakeholders of the organization about how the company has performed over the years or during the past and what are the strategies that it is going to implement in the future to ensure profitability and sustainability. So in simple, financial statements play a key predominant role in understanding or in evaluating the overall business activity that is run by an organization on a day-to-day basis. Now, the next question is who can use financial statements? Now, whenever you say financial statement, it covers the major accounting statements that is prepared by companies like income statement, the profit and loss statement, and the balance sheet. So, these three statements help a particular organization or a company to understand where it stands. So the users of financial statement is not only the organization but the entire stakeholders. So every financial statement that is prepared by each and every organization at the year end gives you an idea to the entire stakeholders on what the company is doing and how has it performed. Therefore, the users of financial statements are not only the organizations but the entire stakeholders, which comprises of investors and shareholders, the lenders, the vendors who supply raw materials to the company, the management, the board of management of the organization, the employee, the government, the customers, the union, the competitors, the rating agencies, and even the general public. So the financial statement that is prepared by organizations has to be audited on a yearly basis, where the auditor verifies the accuracy of the transactions that is done by the organization and figures out whether the company is running under a profit or loss on an actual estimated basis. Now, as I said, these financial statements are helpful to the entire stakeholders. From the point of view of the investors and shareholders, it is important because they are the ultimate investors who aim for profit in the organization. Now, the lenders are also playing an important role to understand the financial statements because they have provided money and they are liable to receive back the money for which the company has borrowed. The vendors are also informed about the financial statements because they provide all raw materials in terms of credit and they have to get back their cash. So only when the company is running into a good profitability situation, they will be able to do that. The management of the organization is concerned with financial statements because they are the people who led the entire organization for a particular period of time and they are answerable to the shareholders or the investors. And the employees are interested towards the financial statements because they are the one who toiled hard throughout the year in order to make the company profitable, and they have to receive their bonuses or commissions on a day-to-day basis, which depends upon the profit received by the organization. Now, the government is also interested to know about the financial statements of the company because the company has to pay taxes to the government on a regular basis. The customers are actively looking into the financial statements because they can also be one of the investors in the organization. The competitors are invested towards financial statements because as the market grows, the profitability of the competitor becomes a key role in determining the selling price of a particular product. The rating agencies play a key role in analyzing the financial statements because they have to give a rating to your particular organization, and depending upon the rating only, many investors will come forth to invest in your company. So similarly, when you say financial statements, it is not only applicable and important for the shareholders or for the management, but it is absolutely necessary for the entire stakeholders of a particular company. Now we will try and understand who prepares financial statements. Every joint stock company that is registered under Companies Act must prepare the financial statements on a yearly basis and get it audited. Now, what do you mean by a joint stock company? In simple, it is an association of many persons who have contributed money or something that is equal to money to have a common stock and employ it for a common purpose. So what can be the common purpose? The main common purpose of each and every stakeholder or the shareholder of the organization is to earn profit. Therefore, nowadays, every joint stock company does not only focus on profit maximization, but focuses on wealth maximization. So, in simple, financial statements has to be prepared by each and every joint stock company that is registered under the Companies Act. Moving on further, whenever we say financial statements, according to Companies Act 2013, the financial statements or the final accounts comprises of various components under section 2 subsection 40. So the various components that comprise of financial statements are the balance sheet, the statement of P&L, the cash flow statements, the changes of equity that is applicable, and any explanatory note that is forming a part of the above documents have to be annexed with. So all these documents become a part of financial statements. Now, in order to prepare these financial statements, the journal entries that an organization maintains and the ledger accounts becomes a key essential role for preparation of these financial statements. Now, let us quickly understand what are the objectives or why do we prepare financial statements. The first and foremost reason is to know the financial position of the company. So, in order to understand where I stand, where the company is positioned, how much is the profitability incurred by the organization, I have to prepare financial statements, or the company has to prepare financial statements. So the second objective is to provide a true and a fair view of the state of affairs of the company. So whatever is happening in my company, I have to project it to the entire stakeholders that this is what is my profitability and this is the position of my company as of now. So therefore, we prepare financial statements in order to know the true and fair view of the company. Thirdly, to compile the accounting standards prescribed as per the Companies Act 2013. So as I told you, financial statements is a mandatory document or a statement that is to be prepared by every organization that is registered under Companies Act 2013. In order to compile with the standards, every company has to maintain the prescribed financial statement as per the Act. The fourth reason is to ensure that the stakeholders are aware of the performance. Therefore, if you see at the end of a financial year, many companies and nationalized banks, after auditing the balance sheet, they try to publish their audited balance sheet reports in the newspapers. If you look into newspapers like Economic Times and Business Line, you get all these audited reports of nationalized bank and top companies of the country where they display the audited balance sheet to the stakeholders. Therefore, they display it in the newspapers. So it is one of the duty of each and every organization that is registered under the Companies Act to inform its stakeholders about its performance, whether it is running in profit or loss, whatever, the true view has to be displayed to the entire stakeholders or the general public. And the next objective of preparing financial statements is to pay taxes to the central or state government as per the financial position. So as per the profitability of the organization, the company is liable to pay taxes to the central government or state government. So hope we all understood what do you mean by financial statements, who are the users of financial statements, whom does the financial statement benefit, and why do we prepare, or the objectives of financial statements. So thank you all for your valuable time.